The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Hey, trader Stacey Burke from Stacey Burke Trading. Today, a combination of technical and a mindset reset. Starting off Monday, day one, the opening range in a new week. We talked last day the importance of the closing range of the week. Monday is day one, and from Friday's closing price begins the auction process. Because I'm looking for rinse and repeat, that way I've potentially got the odds in my favor if I can find the same types of setups over and over again and execute them, be one and done. As the week unfolds and the range is just starting to trade, my go-to approach is always on a Monday, typically a 3-session setup. A 3-session setup. High of day, high of week, high of month, high of year, as we saw in gold today. But again, I'm only trying to identify one or two prime candidates, and then once our session begins, watching how price behaves and looking for that opportunity to present itself. Now, we had a market today that in Asia broke higher, and gold is at an all-time high. We've auctioned up from closing price, taken out the all-time high, and made a new high in the Asian session. That market proceeded to push higher and broke down in the London window before pumping back up and collapsing down through closing price and reversing into our US window. This breakdown through closing price takes out our low of day, but I call that a snowplow. That snowplow is already rifled through our low of day. That is a lower low template setting up potentially for a pump and dump. As I state in almost every video, there are only two types of setups on the day if and when they present. That is a pump and dump or a dump and pump. We can coincide that with a larger 3-day template, first red day, first green day. But on the day itself, we either have a well-engineered template for a pump and dump or a dump and pump, or we have nothing at all but a messy chart in our window, in our timing session. This market proceeds to push up first hour. Pushes up higher again into our second hour. Now this is where we talk about third hour opportunities. That is no secret. We talk about a third hour opportunity because if the 9:30 New York Open closes at 9:59 p.m., that is a 4-hour candle closing at the extreme, at the all-time high. But I also want to point something else out to traders. This level is also exactly 100 pips from closing price. So in terms of targeting asymmetrical risk reward, I have traders asking, what about this trade? What about that trade? My response continuously will be to you, what setup are you hunting? What setup are you hunting? I talk about my friend Steven. He trades reversals, but only after they break out and not until 10 a.m. onwards. We have a perfect opportunity here for the 10 a.m. reversal, exactly 100 pips away. Now, this is what I refer to when I say asymmetrical risk reward. The market has just started trading. It's Monday. It has just started trading. We've auctioned from closing price a little bit lower, gone up 100 pips. There's our box. We're at the top of the box. They've broken slightly higher and failed and broke down inside, pumping back up into the high. They've broken down again, a lower low. 1 hour, 2 hour, pumping into the high of the year, the all-time high as the hour ends for the parabolic collapse back down into the closing price level, a pump and dump template. My point to emphasize to traders is that everything is timed and measured. We are exactly 100 pips away from closing price as the third hour begins. We have a 1-bar stop. So when traders are targeting pushes and gaps and hunts, sorry, this is a 5-minute chart, but what setup are you hunting? All of that stuff is subjective, it's inconsistent, but we have levels. The market has auctioned up exactly 100 pips. Do you think that that is an accident? This is our opening range now. Now, if we go to our 30-minute and just back this up and we go to a blank template, we now have our opening range for the new week. There's our high and there's our low. Friday's closing price is where everything started to create the range from. But this was an opportunity in the US session for a pump and dump reversal, third hour on gold. The SP 500 closed in breakout. As we expand our range from closing price when the new day begins, the market auctions down before trading higher, pumping up in Asia, making a high of day. Doesn't take out the previous day's high. We've already closed in breakout. And then goes higher in the London session, making a higher high. We still do not break Friday's high of day level. Now, if you understand, we potentially have traders have asked about peak formations, and I repeat this. They've asked to go over their videos in the library about peak formations. At this level right here, the high of day, high of week, is our peak formation. That's what forms the high of day level, is that level right there. That is the peak formation made in the US session. Made in the US session. So when New York opens, we auction lower and take out the low of day level. Again, I call that the snowplow. That's what clears out the low of day level before they pump it up back into our high of week, our Friday high of week. Remember, third hour opportunity hunting on the indexes, metals, and energies. Now we have a market that pumps up before breaking structure on the inside, pins both sides as the third hour begins, and they pump it back up and begin the collapse back down through the low of the day. A pump and dump template, third hour on the SP 500. Next, we had the Japanese yen was in breakout when we come to our New York session window. We also potentially have a 3-day setup. Now, a lot of traders get tripped up on this, and I'll be explicitly clear here. A 3-day setup. This is a 3-day template. When we're on a Monday, we count back 3 days. Thursday, Friday, Monday. Now, we need to find an instrument. If the Japanese yen, when we arrive for our session, it's in breakout. It's already in breakout. More importantly, we're on Monday, day one, the opening range. We've broken out of Friday's low, which is also the low of the month. Not only the low of the week, but the low of the month. Now, let's clarify a 3-day setup. Thursday broke out and closed back inside as a first red day. Thursday broke out of Wednesday's high of day and failed. Now, Tuesday was the first red day on the front side of the week. Thursday continued that breakdown from Tuesday's first red day. Friday breaks Thursday's low of day. That starts our new day count as soon as a daily level is broken. So a lot of times people in the past have said, oh, it broke out and failed. That's day one. No, the day count doesn't change for a 3-day template until a new daily level is broken. So understand what a breakout actually is. It doesn't fail until the other side is broken. It could still be inside. So Friday's day two. We get to Monday. We break out in Asia, taking out the low of the month. We are now on a 3-day potential setup. Now on day three, on any day three, there are only 2 types of trades: trend trades and reversal trades. What type of template do we have on the day? Is it a well-engineered pump and dump or dump and pump opportunity? The market breaks down in Asia and puts a low of month in place. Europe opens and continues to auction lower before reversing back inside of the original breakout. Potentially now have a 3-day, 3-session setup as we begin the US window. Now, just to point out, this lower blue line is 100 pips away from closing price. 3 levels of drop minimum, 75, 25, 25, and 25. But we've broken out. We've gone lower and pulled back inside. They're now dumping back down into our peak formation low made in the London session, giving us the parabolic coil for the explosive move back to closing price on a 3-day, 3-session reversal opportunity on the Japanese yen on Monday, day one, the opening range. We've auctioned down 100 pips, coiled sideways for the parabolic explosive reversal back to closing price. So the question I always ask is, what setup are you hunting versus taking trades? Because instruments will come up on my watch list based on criteria that I will look for based on Friday's close and how the market's traded when I come to an opening range day one Monday session. What type of opportunities do I have? Do I have markets that have closed in breakout? Have they broken out again? Copper gave London session traders a end of third hour parabolic continuation trade in a market that closed in breakout on Thursday, broke out higher on Friday but closed in range, coiled sideways in a larger dump and pump template Monday day one, closing range on Friday, the coil sideways and the continuation trade in the London session. Now, the pound Canadian is a great example for traders for a couple of reasons. Number one, we had a large geometrical box, as I talked about Friday's closing range the previous week. It broke out again and failed before reversing and coiling sideways into the close of the week. This is what Peter Brandt would call a pattern within a pattern. A rectangle coiling sideways at the top of the box. Classical charting, rectangular horizontal box, potentially targeting a measured move of this breakout, a market that is now in breakout on Monday, day one, at the beginning of a new week. Now, this is a classic example of do not counter trend a day one runner. This is a market that is in breakout and expanding the range. Traders come to the screen and go, oh, it's up high. I'm going to short it. Now, again, the question I have for you, if you're coming to the screen on Monday and you're looking to short something because it's up high, is that your best trade candidate? Or are you just looking to try and short something and hope that it goes down in a market that's in breakout? It's a day one runner. Now that market may, on day two, coil sideways, go higher or break down, and we may get a day three trade. Day one, day two, day three. But when it's a day one runner, is that the setup that you normally hunt? What setup are you hunting, or are you looking to take trades? There's a distinct difference. Rinse and repeat means taking the same opportunities that show up on different instruments every single week, executing them, because there's a high probability that when you trade the same setup, the easy money making setup, that you can understand the behavior of price, a well-engineered template, where your entry, risk management, and your profit target are going to be. Next point I want to just talk about briefly is this, that when we're on the front side of the market, front side of the week, Monday, Tuesday, Wednesday is the front side of the week. Typically, I'm going to nail and bail because the range, the market is just establishing the range in a new week. It's just starting to expand the range, which is why if I draw those lines on there, 100 pips away from my potential level that I'm targeting, I want to try and be at least that distance, offering me asymmetrical risk reward. 100 pip box, 20, 25 max stop loss risk on the trade. We're looking at 4 and 5 to 1 as an opportunity. So understand exactly what you are looking for. Rinse and repeat means exactly that. The same setups over and over and over again, whether you're trading a pump and dump or a dump and pump. Ultimately, any opportunity, even if it's a trend trade, it doesn't matter. It will culminate as a dump and pump template, as we saw on copper when it was still in a trend, or it can culminate like a pump and dump, as we saw on gold, or we can have a 3-session dump and pump like the Japanese yen. But everything starts from Friday's closing price when the new week begins. My last point is everything is timed and measured. Everything is timed and measured. Monday's opening range, we got a 100 pip box on gold. We had a 100 pip box breakout on the Japanese yen. Timed. The U.S. session begins, that market reverses. At 10 a.m., the third hour, commodities, indexes, metals. We saw third hour reversals, silver, gold, parabolic collapses. Hour 1, hour 2, back up into the all-time high on gold. Third hour opens for the parabolic collapse. And number 7, the behavior, mindset, beliefs, daily process, and the live skill set of the trader. Now, I talk about this because this is paramount in understanding exactly what you're looking for. Now, if you're not sure, be willing to sit on your hands and wait. Sit on your hands and wait until you understand what it is exactly that you're looking for, but also that timings, levels, behavior of price. If you're getting caught in all the little candles, you've missed the big picture. Everything is timed and measured. When we have a market closing, I've talked about this at the extreme. At the end of a 4-hour candle, currencies are 1 hour earlier than indexes, metals, energies. There's a 1 hour gap between 5 p.m. and 6 p.m. before indexes, metals, and energies begin trading. Currencies roll over and begin trading right away. So their new 4-hour candle rotation, their new 4-hour rotation is 1 hour earlier. So if you're looking for that opportunity, a third-hour opportunity on a currency, you may be surprised if it moves in that first hour, especially if it is a 3-session setup. Breaks out in Asia, breaks out again in London, and pulls back inside, coiling into the U.S. window. No major red news on the schedule today. We have an FOMC week. An FOMC week. FOMC week to me means look for backside opportunities. So we talk about nail and bail on the front side. Nail and bail as the week is just starting to establish its range. So if we had a 100 pip box on gold on Monday, we may have a 300 or 400 pip box by Thursday or Friday. An opportunity where we get larger asymmetrical risk-reward opportunities as that box expands in size. Last week we saw a range expansion just like we saw in the pound Canadian, where it broke out of the box and continued to expand the range. We may see a range reversal opportunity. What is a range reversal opportunity? Well, we could see the escalator type of activity for the parabolic elevator ride down. Doesn't have to be on gold, it can be anywhere. But these are the type of opportunities. As the range expands over the week, our box gets bigger, and now we're potentially targeting larger asymmetrical risk-reward opportunities. The ACBs, the ain't coming back trade opportunities. Use Bill Lipschutz's quote again. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Now, obviously, there were other markets that offered opportunities in different sessions today. But what setup were you hunting, you yourself, in the session that you were trading? How did price behave? What opportunity was it? Did you execute well, manage your risk, lock in the money, and walk away? I'm looking for rinse and repeat opportunities that are scalable over size. We got our front side opportunities, our back side opportunities. Sometimes traders get beat up on the front side. They don't even make it to the back side. They miss the easy layup that's scalable, 5-star scalable. And all they had to do was sit on their hands to take one great trade in the week to significantly compound their trading account. That's the difficulty, the behavior of the trader. Now, tomorrow's day 2, and day 2 typically expands the range. Now, depending on what instruments you're hunting, we may find markets that are expanding the range with trend trades, maybe in the London session or the Asian window. Or we may see that range expansion on a major red news catalyst that takes traders further away as we head into FOMC Wednesday. So keep it simple, trade smart, hunt out, rinse, and repeat opportunities. Don't get into science projects. Don't beat yourself up on the front side. Be willing to sit on your hands and wait for the easy money laying in the corner, as Jim Rogers says. Keep it simple. Have a great day, traders, and may the markets go with you.